How's it going, traders? Hope you guys can hear me. It's exciting to be back here again to have this conversation with you guys. I think last month's live session was superb. I don't lie to you, even me myself, sometimes I go back to watch that live session and then learn from it. So if you're here and then you missed that live session, I think it will do you good to go back and really go and learn from that live session. It was a very, very powerful session. All you have to do is just go on Exness's YouTube, right? Just go on YouTube like this, look for Exness, right? You come here, videos. In fact, you actually see it on live, right? Then you should see it here, this one, technical analysis of Kojo Forex, this one, right? It was a very powerful session, very, very, very powerful. Because I'm going to build up from that point for today's lessons, right? I'm going to build up from that point for today's lessons. Like I said, occasionally even myself, I go back to watch it. It was so good. Like, we delved deeply into gold fundamentals and what moves the market or what drives gold prices, right? Talking about, the US macro drivers, global demand drivers, and sentimental and position metric plus geopolitics. Once you understand that, then the next thing is obviously understanding, the technicals, right? One thing I didn't do, which is normal of what I do all the time, is ask you guys where you're watching from. But I know that my Ghanaian brothers are here, my Nigerian brothers are here, South Africa is in the house, Kenya is in the house, Dubai is in the house. Anyway, if I didn't mention your country, you can just mention it. Let me know where you're watching us from. It's exciting to always connect with you guys. But gold is interesting, while you're commenting where you're watching us from. It's also interesting that we kind of take a good deep breath to appreciate what gold has been doing for the last 2 months back to back, right? I'm watching from DC, Rwanda, China, Malawi, wow, all over the world. Like I said, gold has been very interesting, guys. You know what I always do when it comes to gold? I always mark up my levels. So let's pick 4,000. Then let's pick 4,100. Then let's pick 4,200. It's just good that we have these markups. It lets us know where we are sitting in the market. 4,300. Right, so it means that gold was a little shy of 4,400, just a little shy of 4,400. And then here we have 3,900, 3,900 here. You can see that. So let me just put 3,800 here, and that's all I need from you for now. Once you have this, right, maybe we can just add one more level, 3,700, so that we know that we've covered some good area space. That's all I need from you for now. You can see that once I have this, I'm watching it. This is also marked up in the 4-hour time frame. What can you make of this? What can you make of this? What you can make of this is, you can see how, if I zoom out, right, how insane gold was trading and just kept going up and going up and going up and going up. What most people don't realize is that you don't see the real reasoning behind this huge volatility, right, huge runoff, unless you're watching from an extremely higher time frame, right? This dawn, when it was let's say 1 a.m., 2 a.m. Dubai time, I was awake and I was studying, right? What was I studying? I was up with one of my very, very exceptional mentees, right? He's very good at what he does. I've trained him for like the last 4 years, but like I always do, I tell people that it's good to learn from me, but after learning from me, it doesn't end there. Go ahead in the world, explore new skills, explore new insights, and see how you can infuse it with your own knowledge that you've learned from me and define your own reality. So that's something that he had gone ahead to do, for a long time. I saw that now his markup was a little bit different. So anytime I observe that from any of my mentees, what I do is I always invite them, set up a Zoom meeting, and then we do break down the chart together from their new perspective or their new insight or the added on features that they've added, basically in how they look at the market. So we've been going back and forth at this, looking at, and that's the fact that he's kind of infusing our, sniper entry strategy with the popular smart money concept that everybody knows. So we kind of always try to see the balancing point, right? Now, why I'm saying all of this is that what I realize is that those type of concepts, even though they're like so good, in their own way, what you tend to realize that most traders miss out on is disregard for the traditional technical concepts that always has an immense way of driving the market. Example, chart patterns, right? So I'll give you the exact details of what I'm talking about. But why I'm referring to that is that if you watch this move, if you're marking up your chart from, break of structure and then looking for liquidity, you would miss out on the bigger picture, which emphasizes the fact that if you look here, this is me switching to like the 1 week time frame, right? Maybe it's too wide for us, so let's come to the daily time frame, right? If I switch to the daily time frame, the picture becomes even clearer. What do you see on the daily time frame? You see that what I can mark here like this, right? And then I can mark this range like this, right? Do you see now? Now, when you see a pattern like this, what do you expect? A breakout on the upside. Why? Because the market started trending from the upside, right? It went up like this before the formation started, right? And after that formation, what do you expect? A breakout and a continuation. So remember, this is happening on the daily time frame. So with this type of pattern happening on the daily time frame, do you think that the resultant breakout will be small, right? If you even check the distance from where it started after like that structural movement here, right, which is this point here, and then you try to measure the equidistance from that point to the breakout, then you literally have the same distance. That's one way of measuring potential moves of the market. It's the same way that I used to explain like head and shoulder patterns to you guys. That let's say you're a trader that likes head and shoulder, and then you see like the left shoulder, then you see the head, then the market comes back to the right shoulder. Normally, I tell back in the days, traders would be waiting here for a break on the neck line for a buy, right? But with what we know today, we don't wait for the break on the neck line. We already mark out the potential range, which is like this top of the right shoulder, which is equidistant with the left shoulder, at the top of the left shoulder, which is the head here, right? And then look for confirmations for a buy. But what I'm saying is that assuming the market is already here, right, now you're looking for the breakout. The breakout is usually figured out from the equidistance from the neck area to the top of the head, right? You measure that same distance up like that, then it tells you where the breakout is going to be, right? So that's like something that you always must also remember. So I'm using the same concept to relate with you with what we're seeing here in gold in terms of like the pattern and then what you would have expected, right? So you see this pattern, you don't expect that the market will trade up to, let's say, this range or this range. It will most likely, cover up the same distance that it used to form the part in terms of the swing high, the consolidation, and then the breakout, right? And that's what exactly we had happening with gold, right? Most people didn't know when to take profit, right, when gold was going, and most people also didn't know when to just stop the pursuit of looking for buy positions. But I've just revealed to you one of the key informations that led me to stop trading or close out my positions and max out the most, or let's say max out the most out of the swing position that I was holding, right? So I particularly closed in the mid-range of 4200 and 4300, right, just around here. Even though gold made a little bit of continuous move, I was okay, right? It was better to be out than rather watch the market pull back immensely, about almost 2000 pips after that swing high. So once you have that type of knowledge, what you do is that it doesn't always just guide you for what's the name, it doesn't only just guide you for the breakout, but it also just guides you for where to take profit, right? For where to take. Someone say don't forget to add the lesson of psychology. Okay, no problem, we can delve into psychology in the market as well. So I love psychology. Psychology is a very important topic and concept for me, right? So now that we were there, obviously we don't trade in the daily time frame, right? So we switch back into the 4 hour, right? Look at the classic pattern that occurred here, right? I don't know how many of you really had the balls to catch a trade like this, but this is like one of the most beautiful, will I call it a pattern or most beautiful setup that I've seen in the market in a long time. When gold had made that all-time high, right, pulled back here like this, right, visited the high exactly to the T, and anybody else would be skeptical around here, including myself, and I expect you to somewhat, right? But if you know what I know and what I've taught you guys over the years, once you see this whole boil up, right, hits the zone, pull back with a bearish candle, we already have the tweezers there, shooting star, we have the hanging man, right, around this range. Gold is screaming for a sell, right? So anybody could have taken advantage of that massive sell and then made money from there. But from there, gold has never looked back, right? Relentlessly moving aggressively on the downside. And this is where you must understand market structure, right? So for a long time, we have kind of subliminally not spoken much about structure, because it gets to some point where I assume that everybody is at par with me. Sometimes it happens subconsciously. You kind of assume that, oh, they know market structure already, we don't need to talk about it. But sometimes it's important that we visit some of these concepts, because if you watch here, right, I tell you guys that anytime the market wants to reverse, right, do you remember that concept? I tell you guys that anytime the market wants to change trend, there's usually two things that it does, right? So this particular tool that I'm looking for, where is that tool again? Let me see if this can do that. Not this, not this. Okay, it's here now, right? So you watch here, right? Let me delete these ones first. I always tell you that when a market is trending up, right, let's say the trend is going up, down, let's change this one's color to black, into black. Yes, the market is going up, down, right? And let's say it hits this level, right? There are two things it will do. You usually like pull back, right? Visit that high again, and then the trend just reverses, right? Because at that point, you know, the market is failing to create new highs. You see here, it breaks this high, it breaks this high, so you're expecting that it should break this high, right? But no new high is created, right? And if you remember what I've taught you, I said that from our perspective, we assume the break of a structure by finding a solid candle close above the range, right? But as per what you can see here, do we have any solid candle closing above this range? No. So that means that what? There's no structure. There's no structural break, and there's no continuation, right? So as far as there's no structural break, what do you expect? That the market has got to a peak point. If the market has got to a peak point, what do you expect? That a reversal thereof, right? And then even with the reversal, what would predominantly inform it for you, right, is again when you have that last low being taken out, right? You see the last low here, right? And this is what some will call the basic market structure, right? Some will call this the basic market structure. In today's markets, some people have gone further to stretch out the fact that we have what complex market structures, right? Or some will use the term advanced market structure. But it's the same for me. The only difference is that obviously from their perspective, the fact that the market, we're saying that swing high, swing low, swing high, swing low, doesn't mean that there are no intermittent swings in between, which is like within this range you have like a swing high, a swing low, swing high, swing low, swing high, swing low within that swing point before it hits here, right? And then make that same movement before it hits here, and then make that same movement. So in essence, even though we are just like drawing one straight line, right, it's just a bunch of movement in between those swing points, right, which you can also interpret and take advantage of, right? So I hope like what I'm doing makes sense in essence. So don't assume it that it's just one candle that just went, or one wave of movement. It could be series of, you know, up and down, and you can see some of them here, right? Even though I said that this is like a straight line, you can see that it goes up, comes down, goes up, comes down, and so on and so forth, right? So that's something that you should know. So here, like I said, you're expecting like that last low to be taken out, right? And what do we observe here? What do we observe here? The market trades beneath that last low, and it particularly uses this huge candle to break that low. Once it uses this huge candle to break that low, then guys, that is the point where you announce the end of your bullish pursuit, right? Which means that from there on you change your bias. So by then I already expect that with the knowledge of using the equal high here, so it's two ways, like I said, equal high or lower high, right? Equal high or lower high. And you will normally observe the lower high. You can use tools like the Fibonacci and then the candlestick confluences around that area to also pick out that the market is failing. It will not always come and make the equal high. Sometimes it will just be halfway there like that, but you should intuitively be able to pick it up before it occurs, right? So in this particular scenario, we had the equal high, but now the structure has broken lower, right? So what do you do? Like I said, you switch on your bearish motive, right? So you don't start looking for bullish moves from there. And if you observe here, what do we see? Similar to the bull, we have bearish drop, pull back, drop, pull back, and then we have like this series of drop here, right? So somebody will say, okay, but Kojo, when you look at this series of drop, does that not mean that the market is what's the name? The market is reversing and we should start looking for a bullish move now, right? Remember what I told you here, that when the market is going to create a new high, then for that swing low or swing high, a new candle must close above that range. But if we pick individually all the previous highs that were created, like this high, you see that there is no candle close above it. If you pick even this minute one here that the market revisited, no candle close above it. If we pick even this high right here, right, what do you observe? No candle close above it. You see, the only thing that happens is that the candle visited it, tried to push up, close with a wick on the top, and then came back down. So you can see that what all throughout every high that we've created, structure is being respected, right? So yes, we may have not traded below this low right here, which will now create a new high for a new low, right? What I mean is that under the theory of structures, everybody would have expected that since we go here, we'll make a new low, then a new high, then a new low, then a new high. But that's so textbook. You don't get that happening every day in the market. If it was happening that way, then everybody will be a millionaire, everybody will be a billionaire. So intermittently, you have some switch ups, and your knowledge at that point, right, your expertise at that point is what will determine how you're going to address that switch ups. It could be an added knowledge or an added information from what you know from chart patterns, from what you know from candle formations, from what you know from trend lines and channels, from what you know from liquidity, anything at all, right? So if you look at this, for me in particular, then it fell under a categorization of a chart pattern for me, right? Even though, like I said, that high there was not broken. If you check here, right, here high, here high, here high, right? Even though we were making lower high, higher low, equal highs, right? So a low here, a higher low here, then a higher low here, but equal highs. So structure is still firm. Assuming that we had this, and then this, and then this, and then this, then we could have, somewhat been cautious to say that at this point, market is probably like, reversing. And even at that point, right, even when you have situations like this, like I said, you can always employ different concepts, because assuming that you indeed have the market trading like this, right, where it's creating new highs and new lows, right, in a downtrend, right, what could you expect in a situation like that? I don't want you to blindly assume that what the trend has changed, because a situation like this can also cause us to see channel, right, which is like the market creating this wedge formation, which can also break out onto the downside and let the formation continue, right? So when you have such patterns or such formations playing out, the number one way as a trader is to be extremely open-minded and open your eyes widely, open your ears, have your ears on the ground and observe everything, and then be fluid, right? Being fluid means that you are not married to a bias, you are not married to a position, you are not married to one direction. You can always be flexible, but the key point is that what is happening in the market, right? The sad part is the trader who doesn't know what is happening, and that's how come we're having these lessons. So if you see here, like I said, observing those patterns, right, I saw that type of a triangular pattern, right, coming into the range. And remember what I told you about the equidistance of the market in terms of in this case the bearish move, right, before the pattern, right? You can see this zigzag. If we are assuming here to be the breakout range, right, then it means that what potentially this market could be approaching 3750, right? Approximately 3700, right? That's if we are countering here, or if you're considering here as the breakout. So that's why if you watch on my Twitter, and I said that what I said it around here, and I know some people took advantage of it to trade the market. I said it around here that, guys, I'm expecting gold to make its way to, did I say 3800 or 3700? One of them, right? But that was also coming again, guys, from this perspective that I've just shared with you here, because I could see it clearly, right? Lo and behold, around 4 p.m. Ghana, Nigeria time, that was yesterday, and then Dubai time would be like 8 p.m. thereabout, right? We had this insane move, right? So now what I want to explain to you, right, which is going to give you guys an added notch in your knowledge and then in trading as well, is exactly what is happening here, right? Now if you see what is happening here, it may be extremely difficult for you to find an entry, especially if you're not a swing trader, right? And that's how come you must always use multi-time frame analysis, right? And that's especially for gold. You must increase your notch up in knowledge by understanding how to dimensionally analyze the market from somebody say trends like this are very tricky. Yeah, of course, you must be able to dimensionally analyze your market from anywhere from the lower time frame to the higher time frame as well, right? So let's have the bar replay done again. Right. Now this is a very important part, a very important place that you're going to learn a lot. Yesterday, I in particular traded this move, right? I in particular traded this sell, right? And I'll tell you how I traded it, and then you're going to learn a beautiful thing from it. So around 8 p.m. my time, which is like 4 p.m. Ghana time, you know, I trade with Rick, right? Rick FX on Instagram, Rick FX on YouTube. I trained him, I mentored him, right? So we trade together, we always share ideas together. He's one of my very, very, very best mentees, who is now an able mentor of his own. So he just, when this sell-off started, obviously he saw my tweets, we discussed all of these big moves. So he says, Kojo, the sell-off has begun, right? I had swing positions on it, but I'm like, I wanted to day trade this, but I saw the move late, right? Which is when this bearish candle had already dropped, right? Guess what? I saw the market this way, right? And I'm like, I'm not going to let this move pass me by. I saw the market here, guys. I'm like, I'm not going to let that move pass me by. So I jumped in here, right? Which is something that is only recommended when you are a pro trader. You don't want to do something like this when you are a beginner or a rookie, or you don't understand the market dimensions, because it can be very volatile. It can happen so quickly, you don't know how to control yourself. So I'm showing you how to manage situations in instances like this. So I took the position, and the next candle, you see that huge drop there, big profit, right? What is the profit? 270 pips, right? 270 pips. But Oliver Twist, as Oliver Twist as I am, I was like, nah, I want more profit. And I was pained particularly because I was like, Rick should have probably told me earlier so that I'll start jumping in from here and making all that money. So I need more money. And then the whole volatility was so strong. Look at all the series of candles that have been traded hours before, right? Small bearish candles, and suddenly we have this huge bearish candle and then another huge bearish candle. I'm like, the move is not done yet. We'll probably have some continuation all the way to like 3,900 and possibly lower. So guess what? When the new candle opened, right, normally what I do is that anytime I want to trade continuations, when a new candle open, what you normally have me do, right, is I take 50% of the previous candle, right? I take 50% of the previous candle, right? So 50% of the previous candle, you have it somewhere around here. And then once the market makes a pullback into the 50% of the previous candle, I start shorting. Let me give you a good example. Assuming that you were here in this market, right? And then you have this high here and then this low here. But assuming that you had the intent of selling and you couldn't get in on this candle, right? Normally what I prescribe, you wait for this. You came to see, let's say you came to see the market here, right? You came to see the market at the bottom here, right? Which is trading on this candle. You came to see at the bottom here. What do? You don't just jump in here, right? You wait for this candle to close. The next candle, you wait for 50%. You see that 50% of that candle is here. So when this candle has made that pullback, then you can jump in around there, and then you get a better entry with no drawdown to take you further down. Does that part make sense though? I don't know if you people caught on what I was trying to say, but you also again must be very wary and know exactly what you're doing for you to be able to like take such opportunities. But did you get what I shared though? So when the market came there, I started shorting again, right? So remember, I've already closed my positions here and the market came here and I'm shorting here again. But something out of the ordinary happened. And what was that thing that was out of the ordinary, right? See the candle that came. It took me out of surprise. Huge bearish candle, right? Somebody say 50% of the previous candle. ICT traders call it fair value gap. And I don't think so. I don't think so per se, but anyway, I don't know, maybe. But yeah, I took that entry here and then huge drawdown. Remember, I had already closed nice profit, right? So imagine that you've closed a nice profit and then suddenly the market is taking back all the profit and putting you even an extra loss, right? So it's two things for me when the market does this, and this is where I'm going to test your psychology, guys. It's two things for me. When the market reverses like that, right? Let me give you a numerical example, and I'll be asking you this scenario wise so that you explain to me what you'd have done, right? Assuming the first trade, right? The first trade made you, assuming it made you $2,000, right? So you're up $2,000. That's the one that I took on this candle, right? I hope you guys are following. Then the second trade 2, right? Instead of making you a profit, it has now put you in a drawdown, right? In a drawdown of $3,000. It has now put you in a drawdown of minus $3,000, right? Here, right? And guess what? At this point, minus 3,000. What are you going to do? What are you going to do, guys? What are you going to do? Are you going to close the loss or hold, or what are you going to do? I want to know. I'm asking you feedback. I want feedbacks. What are you going to do? I want to see. Right? All this, let's assume that it's like under 5% of your trading capital, though, right? Not as if you're over leveraging. Let's assume that it's under between 5% and 10% of your trading capital. So you're pretty much good, right? Somebody say hold, close. I will close, I'll hold, close. So now tell me why you hold and tell me why you close. Tell me why you hold and tell me why you close. That means that we all say we go hold, but we know we'll close. So guess what I did? Who wanna guess what I did though? Let me see who can guess what I did. Most of you are saying I'll hold, I'll close, But let me see who can imagine what I did as Kojo Forex. Let me see who can imagine what I did. What do you think I did, guys? Let me see those who are gonna get it right. What did I do? I mean, say hold, you closed. Guys, I hedged. Somebody was right there. I hedged. And what does hedge here mean? I doubled down. I added another position here. Don't try this at home. You must be very confident to do this. Number one, remember that I had already analyzed my higher time frame and I knew that gold had given me that pattern, what I showed you previously in the higher time frame. So I was very confident what I was doing. Don't do this blindly. You never want to average down on losses, right? Unless, again, like I said, you are so confident, you know what you're doing, and you've calculated your risk properly, which is something I did. So I added, right? And when I added, what do you think happened? See what happened, guys? Boom, the market came back here, right? Now I'm going to ask you another important question. When the market came back here, right? When the market came back here, let me put asterisks there. When the market came back there, I was back to what? Break even, right? No loss, no profit. What are you going to do? Imagine you made a profit of $2,000 and you closed that $2,000 and you thought the market is going to make a continuation, so you added mid-range, which is 50%, and it took you up, and the next candle you held, and the next candle came and now it's break even. What are you going to do? This is where the market is screaming, I have given you a second chance to exit. Or are you hopeful that the market will go down and make you more profit because you have position at the top here and then in the middle point, and when you add the two together, that's another 280 pips. So what are you gonna do? That is a real test going on here. I'm gonna close, I'm gonna exit, I'm gonna close, I'm gonna hold. And what do you think I did? I'm enjoying these questions that I'm asking you. What do you think I did? What do you think I did as Kojo Forex? It's very tricky and very dicey, and this is the situation that we face every day as traders. Don't let anybody lie to you when they tell you trading is easy. It's only easy in the textbook. When it comes to the real market, you need to be brainy. You need to be brainy to be able to do this. So I'm born, you know. So what do you think I did? I did not exit, guys. I held on to the position, and when I held, guess, to my surprise, what happened? One candle came, then I was in a small drawdown. Another candle came, like, what? Another loss further than the previous one, right? So at this point, let's increase the loss stake here. 3 minus, imagine you're seeing minus $6,000 loss here. And let's say that, right, to make it make sense, right, assuming that your account, so that you guys will not assume that we are trading this on some $1 million account, assuming that your account balance here, so that it will bring some emotion. Account balance here is, let's say, 40,000. In fact, not 40,000. Let's say 30,000. No, okay, no, that's too tight. Let's say 45,000, right? Account balance here is 45,000 or 40,000. $40,000, and you have this. Are you gonna just let one trade kill you, right? More than 20% of 15 to 20% of your capital. What are you gonna do? Like you didn't have things well managed, or things took you by surprise. What are you gonna do? Right? What are you gonna do? Somebody say, I'll add more. Guys, that is a very dangerous thing to do if you're adding more position. I don't lie, though, because you could be carried along, and normally when you're adding to losses, the losses adds up so fast, right? If you're adding to losses, the compounding effect of the losses is crazy. So Mr. Kojo is teaching us real trading psychology. Of course, I'm teaching you real trading psychology, you know. So this lesson is very important. That's why I'm applying real life scenario, real market scenario, and you understand it after this lesson. Trust me, you guys will love it. You know, you will see what happens, because I'm asking you. You are the one answering the questions, not me, right? So normally when something like this happens, like I said, first disclosure is that do not add to losses. The second disclosure is that only do such type of things when you are very liquid, number one, and number two, you are very knowledgeable, and then you understand your terrain, right? Remember, like I said, my ultimate target for the market is still 3,900 based on the higher time frame analysis that I had done, right? So when you have something like this going on, right, let's say from here you entered here and the closure came and then you entered here, right? Normally with me, what I do is that when I want to even average down, I average down proportionally. Average down means adding to losses, right? That's in worst case scenario, when the market scenario requires that I have to average down. I average down proportionally. Proportionally means that I took entry 1 here. I took entry 1 here, right? Then I took entry 2 here. I tried to make entry 1 and 2's distance equal to entry 2 and 3. So I'll wait for the market, in this case, if anything at all, to come here. Right? That's my own little tricks in averaging down. To come here, right? For entry 3 to be added. So let's see what happened, because entry 3 was actually added again. Let's see what happened. Boom! Came back down, up again, and then entry 3 got tagged in. Right? I should have even asked you guys what your emotions here would have been. I forgot to do that. I should have asked you. I should have been asking you here that at this point, because I know that so many of you will run out. Because imagine here, you are not up again at imagine here you are not up again at 6,000 loss, but rather you are back to what? You are back to 3,000. You are back to 3,000 loss. What are you going to do? Right? I know some of you will say, I like this. Past results does not indicate future performance. Consult independent advisor if needed. Risk. They carry high risk due to leverage instrument carry high risk due to instrument, and they are not suitable for all investors. Read the terms and conditions. Don't follow me. I am only teaching this as practical lessons, but don't follow what I did. Right? Do your own due diligence. So now I know that some people would have like closed and say, oh, it's come to negative 600 again, negative 3,000. At least it's better than negative 6,000. Notice I've been sweating profusely. So see what happened. See what happened, guys. That's what I showed you. This candle came up back to loss again of negative 6,000, right? Unpleasant loss of what? Negative 6,000. And then another push. At this push, what do you think our loss will be? Negative 7,500. Assuming. What are you guys gonna do? Finally, now you guys tell me. Now you tell me. Remember, this is your account balance, $4,000. What are you gonna do? Be real with yourself. Don't lie. Don't lie to us here. What are you gonna do? What are you gonna do in situations like this? What are you really gonna do? Tell me now. Right? You were only looking to just catch a continuation and quickly make some extra $2,000, and suddenly the market is now negative 7,500. Like out of the blue. Like this is crazy. You know? Somebody say exit close. What? Right? Now, this is what I teach you. Real lessons, right? So before you let your emotions get to you in situations like this, right? I'm going to put this one here. Before you let your emotions get the most of you in situations like this, first let logic work. Before you let your emotions get to you in situations like this, I said what? Let logic work first. Right? Before you let emotions get the most out of you in situations like this, let logic work first. And how will logic work first? You come back to the drawing board, right? At this point, I think that I need to refresh the screen, but I did not want to refresh the screen. Anyway, what I have to do is I would have to because I don't want you guys to see the aftermath. I want you to see how it occurred. Let me see. Windows capture. Okay, just hold on. Yeah, I'll be back in a second. Just hold on. Let me just refresh the screen. Okay, I think you guys can see my screen now. Let me know if you guys can see my screen. Let me know if you guys can see my screen. I think you can see my screen. It's also, I had to switch it off because the candles were not loading. I needed them to load. I think you guys can see. Yeah. Somebody said we know the aftermath. So like I said, let logic work first. And how do you let logic work first, right? You see here in the market, this was the low, right? If we pick this trend and we connect point 1 to point 2 and then extend it, what do we have here? You see where point 3 is? Are you observing though? Point 1 is here. Point 2 is here. And then point 3 is where? Is here. Right? So point 3 broke, and the market has come back to that retest level. That's first confluence. Somebody say, Kojo, I'm lost. Why are you lost? Why are you lost? Where did you get lost? Tell me. What I'm saying is that, remember that we're talking about the drawdown instances where the trader was expecting to make a continuation from here, but they entered the first drawdown, entered the second drawdown, entered the third drawdown, and their emotions is getting the best out of them, so they want to close. But I'm asking that, what would you have done in that situation? Rather than close, take a step back and analyze, right? And give yourself that second chance. And when you give yourself that second chance, that's where you realize that, oh, I should have marked this, and this is point 1, point 2, point 3, break retest scenario. Apart from break retest, another thing that you can do is that if you pick this, let's say, vertical line here, right, and then you want to start from where the day began, right, because it's like 3rd November, so this 4th November here, right, and then you want to mark out the Asian low, right, you realize that this was the Asian low, right, Asian session. The Asian session traded here, right, halfway through, so somewhere around here. So the lowest of the Asian session was here, right? So apart from the market being a break and a retest, it has also visited what? The Asian low right here, right? And if you know anything about Asian high, Asian low, what you realize is that normally when the market breaks an Asian high breaks an Asian low, it would normally come back to retest that Asian low and continue down, or retest that Asian high and continue up, right? So seeing this, then I'm like, okay, then I have like a last bet, right? And that last bit of a bet is that if this market continues to trade or print any extra candle above, then we call it a gun. You know, we call the gun to a close, which is like you finally accept your defeat. Somebody say you can apply Fibonacci as well. Yes, you can mark the high low, you find the market probably falling around the 61.8, 78.6 retracement region. But in this instance, I personally did not use Fibonacci. I was using this logics, which is like looking at the Asian low and then looking at the break and retest scenario. So guess what? Around this time, guys, it was so late. It was around 10, almost 10:30 here, and I went to sleep. Right? I just set up my loss potentials around like above here. That's when, like, you know, situation where any trade above here means the market is closing above here. So I put like my stops and potential exits around here, which is expecting that if the market comes in, then the likelihood of it continuing is high. So I just put it there and I went to sleep, right? Would you have been able to sleep if you had such a scenario going on? I know most traders will not be able to sleep. Small time their eyes will open. You just sleep, no, they had to go cut. Hey, Charlie, what do you have for my trade? You can't even doze. But I went to sleep. I went to sleep properly. And the only reason I was able to go to sleep is because I had already calculated my potential loss and I was psychologically okay with it. When he said no, I said never. Man, that's what I'm teaching you. You need to train yourself to be able to come to terms. What are you trying to tell me, man? Say all night. I want to sleep. You're not gonna be able to sleep. You're gonna put broomsticks on your eyes to hold it, like you're gonna be doing all night prayers. I know most traders are just gonna be like, you know, all over the place for a move like that, you know. But like I said, I personally just want to sleep. And guess what? I woke up like 4 to 5 hours later, right? I went to sleep, I had a very good night's sleep. I woke up around 3, 4 a.m. because that's when I usually start working, right? And when I woke up from sleep, what do you think happened? When I woke up from sleep, what do you think happened? See here, this candle came, and 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 this one, 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 and this one. Right? I woke up around here. I woke up around this candle. Right? I woke up literally around this last candle here. I'm like, what? That was an easy blessing. You know, simple profit in my pocket. And I did what? I just exited those positions. And that's what resilience does. And that's where applying logic before emotions works. Because if I just was counting on the losses and not the market setup and the structure and the levels and the ranges and the Asian low and the candlestick patterns, I would have just taken an unnecessary loss. You know? And this morning, what happened? We marked this level again, which is the low, expecting the market to break lower. But subsequently, what happened? You had gold come back into that range and started consolidating again, right? After this consolidation, you just know that what? The breakout isn't happening, right? And because the breakout isn't happening, you can see the candle confirmation and confluence and then accumulation going on here, right? And when accumulation is going on, what you normally observe is you have first low here, second one, third one, then this wick here, right? If anybody here has studied Wyckoff, then they know what I'm talking about. Then that's where you know that, okay, the market is building up for a reversal on the upside, right? Then we switch positions for an intermittent long trade. Stops below, profit back to this level, even though big time frame wise, all time high, we're looking for what? The sells, right? And what happened? And then it puts us here. It puts us here, and now we're back here, right? And now that we're back here, you may want to ask yourself that, does it invalidate the sell position? That's the real question. Does it invalidate the sells now, right? So now you've understood all these processes and all the formations and all the steps and psychology behind it, and you understand that you must let logic work before emotions get to you in the market, and then open your eyes widely. What I observe currently is that, if you remember from all the other statements, as I said, there are certain things you can see from above. There are certain things you can see from afar, you cannot see from close. And there are certain things you can see from close, you cannot see from afar. All right. Now, this break and retest happened on a lower time frame, 15 minutes. But if we now switch on to the 4 hour, right? If we switch on to the 4 hour, what do you observe again? Right? What do you observe again? Let me refresh all of the screen again. If we now switch on to the 4 hour, what do you observe? Bringing this back to the 4 hour, what do you observe? If I take this off like this, right, and I bring this back to the 4 hour, right, doesn't it also look like on the 4 hour it's also having its own break and retest type of a thing going on here? Doesn't it look like the 4 hour also just had its own break and then potential retest for a continuation, right? That's something for the market to prove. So once you understand this type of logic, right, you would understand how to meddle in between the market on lower time frame, on higher time frame, on day trade, on swing trade, you know, and catch moves in between like that and profit from there. So I hope this lesson has opened your eyes to a different dimension, and I hope this was very insightful and entertaining as usual as well. Somebody says, so can we sell now? You're asking. me the wrong question at the wrong time. So I'll give you guys the next 1 minute to tell me how insightful this is, how educative it is, what you learned, what it added in terms of extra knowledge to you before we wrap up. Somebody say, Kojo, how old are you? I'm as old as Methuselah. But I hope you guys learned a lot. I really did enjoy coming on to share my insight. You know, what do you guys think is going to happen with gold in the next couple of weeks to come? Is it going to sell? Is it going to buy? Did you learn a lot? Was it interesting? I know you guys learned a lot. Somebody says, thank you very much. I learned a lot. I appreciate. Massive, very insightful. All right, guys. I also did enjoy coming again to share more knowledge, and I'll always do that. Sorry. The next time I'm going to see you guys is in December. The last time we did this, I was in Ghana. Guess what? Today, I'm in Dubai. Who knows? The next lesson, I could be in another country. But that's just the freedom and possibilities that trading gives you. It's very exciting that I'm able to be here today and share some of this motivations and knowledge and insight with you, because like some 7, 8, 9 years ago, it wasn't the same. You know, found me in my own small corner bunker in Ghana, driving my what's the name, Dodge Caliber, my first car that I bought for 20,000 Ghana cedis. 20,000 cedis now is like, in dollars, let me check, that's like $1,800. I bought my first car for $1,800. But now I'm in Dubai driving cars that cost $300,000, $200,000. It's just a matter of time. Lock in, put in the work, follow the principles, be disciplined, be confident. Confluence enables confidence. I was telling my mentee yesterday, I said, confluence is what enables confidence. If you're not confident, if you don't have the confluence, you can never be confident, right? And these are some of the confluence I've showed you, right? What I showed you there is a pure illustration of confluence. Watching the highs, the lows, the candle patterns, and I was confident. Like, I'm not gonna be relentless. I'm gonna be relentless. I'm not gonna close. I'm gonna hold it. I'm gonna see how it plays out. And it did play out, and I made money, right? So keep your guard up, keep your hopes high, lock in, properly lock in, go all out, and who knows, could be sitting on a table of men with me in the next couple of years. You're very well invited to the top. I'll see you guys in the next lesson.